Welcome back. You're watching Prime Property. I'm Nayantara Rai. Earlier on the show, DLF said RBI's 50 basis point rate cut would undoubtedly boost sentiment, but it's unlikely to lead to a revival of the property market. I also reached out to MOTILAL OSWAL to get its views and also if a decent price correction is on the cards.
Can it be a game changer? I'm not really sure about that. I think the impact will be more in the middle income housing, where the buyers are more dependent on housing loan, and their ability to borrow and buy housing goes up in an interest rate cut. I'm not really sure it will make too much of impact into the higher end of the market in the luxury segment, which is continued to face challenges because of the high prices. But interest rate cut would definitely give a boost to real estate in short to long term.
Now, Sharad, everyone has a different definition of premium housing, affordable housing. How are you defining it?
So I think there are three segments for me. One is low-cost housing, other is mid-income housing, and third is which is luxury or high-end. I look at more from a 3,000 to 6,000 rupees a square feet per square feet market, wherein I believe is the maximum demand. There is a fair bit of demand at low-cost housing also, which is sub 3,000, but there the margins are challenging in nature. So this is the segment where there has a maximum demand. This is really the middle class of India, which can really come and buy. If you look at Bombay, markets like Bombay and Delhi, there is the high end of the market, which is, I would say, is anything more than 6,000 rupees a square feet, which I will define as high end.
We've talked about home loans. What about the builder side of the story? You know, they can access cheaper debt, they can refinance that debt. Do you think they're going to pass on that benefit to the buyers?
Unlikely. If you really see, there are two parts to it. One, the overall cost of capital for a developer continues to be high. Unlike the housing borrower, where the interest rates are going to go sub 10, reality is for a real estate developer is that his cost of borrowing over the life of the project is more like 18-20%. A 25 to 50 basis point there is probably not a significant cut. Second, I'm not really sure how much is the bank going to pass on the benefit while doing developer lending. Clearly, directionally for home loan lending, there would be benefits which will be passed on. I don't think so. I'm not really sure how much will be passed on by the banks while doing a developer lending. Third, there are a lot of other costs involved into it. To say that the property prices can come down because of interest rate cut for the developer, I don't think so that's going to be the case.
DLF earlier on the show has said it expects the pain in the property market to continue for another 4 quarters. What's your outlook?
Clearly, the pain is there in the real estate market, and the way probably one has to look at it into divide into two parts, residential and commercial separately. Both the markets are looking differently from each other. If you look at residential market, the market has been reeling under pressure for last 2 years because of low sales, and largely the sales have been slow, the velocities have been slow because of high property prices. There also some of the markets like Delhi and Bombay, wherein the higher end of the market is much larger, is feeling more pain as compared to some of the southern part. My view is that the property prices will remain stagnant in the mid-income housing for next couple of years, and with a price correction expected in the higher end of the market. Over a period of next 2 years, coupled with interest rate cut and the disposable income going up, what is currently not affordable will probably become affordable. So we are looking at a more of a time correction than a price correction in overall residential real estate market. I also believe there will be a fair bit of consolidation that can take place in this market, with the price rise not happening over a period of 3 to 5 years. The smaller or mid-sized players will probably find it challenging. As far as the commercial market is concerned, commercial market really went through a challenging time between say 2009 to 2013. Now we are seeing the bottoms of the vacancies, and it's a matter of time with the expectations of economy rebounding that these vacancies going up, vacancies going down, and in a matter of say next couple of years the rentals going up. I would say commercial market looks better as an investment than a residential at this point of time.
I'm going to get to commercial real estate in just a bit, but this is something I'd ask DLF as well. Why don't builders just cut prices and try to revive demand?
So I think we need to clearly understand distinction between time correction and price correction. If the prices have been stagnant for last 2 years, and we are saying that it might remain stagnant for 2 more years, a property price is stagnant over a period of 4 or 5 years is a deep correction. Even if you put a cost of capital or return expectation around 15%, we are looking at a steep time correction. What we are also saying is that in addition to that, some of the markets where the property prices are really unaffordable, specifically in the higher end of the market, we can see price correction as well. I think in the middle income housing, which is between 3,000 and 6,000 rupees a square feet, that we really keenly focus on, I don't think so there are too much margins to really prices to go down.
You're saying prices will stay stagnant for all these properties costing up to 6,000 rupees a square foot. Beyond that, there should be a price correction. How much?
Difficult to predict actually. Whether there will be correction that can happen in terms of price, or it will be happen in terms of freebies and a lot of subvention schemes that we see. But I think anything between 10 to 15% will be a fair number to look at.
Then from everything that you're saying, why should anyone buy a property now?
So, like I clearly said that when you are buying a residential property, you need to distinguish whether you are making that as an investment or as an end user. If you are an end user of a property, this probably would be the best time in next 1.5 to 2 years to buy a property, because you are expected to get a good deal on it. If you are looking from an investment perspective, I think that's where the struggle is. It's a waiting game between the buyer and seller, which is the developer and the buyer here. And clearly when the higher end of the market, seems to be pain expected, people are waiting for it.
I want to now get back to commercial real estate. You said investing in commercial real estate is a good idea. How's that panning out? And do you really get good yields? Because I thought it would be if you buy entire buildings of, let's say, IT parks. That's not really possible.
Yeah, so the clear shift from a direct investing perspective, and when we are looking at investments in real estate, we need to segregate between how an HNI or a retail investor does versus an institutional investor. Institutional investors like us will continue to invest into residential properties. Not only we get good deals with good developers during these tough times, we also have access to the developers' project profit, unlike a retail investor or HNI investor. From outlook for a HNI and retail investor, clearly commercial looks better, and this shift we are seeing over a period of last 1 year, where the interest rate cuts were expected. The HNI smart money started going more towards the commercial assets than into the residential.
And what have been the ticket sizes of all these investments you're talking about?
Unfortunately, there are in India now with the category A offices, the way they are built, there are not too many small offices which are built. I would say anything between 25 to 100 crores, wherein there is the possibility of leverage also coming along. For a pre-leased asset, there has been a fair bit of capital which has been allocated by the HNIs. And
in which cities? Is it Delhi, Mumbai, what?
Yeah, so IT is the driver for commercial in India. Almost 75% of the asset class in commercial is IT. So Bangalore and Pune. But I would say Bombay is also one market which is non-IT and has been struggling in commercial space for last 6 years, have been fair bit of takers.
That's MOTILAL OSWAL saying a 10 to 15% price correction in premium properties is very much on the cards. And given the economic green shoots, HNIs have started betting big on commercial real estate. With that, time for a short break. On the other side, we tell you how builders and cement companies are once again at war. Stay tuned.